week's edition of the Bourse Report. I'm Carissa Gobin, an investment analyst at Bourse, and today we'll be reviewing the financial performance of Republic Financial Holdings Limited, or RFHL, and Guardian Holdings Limited, or GHL, for the respective 6 months period and 3 months period ending March 31st, 2026. Republic, or RFHL, delivered its solid performance supported by higher revenues, while Guardian, or GHL, earnings were impacted by volatile financial markets. So firstly, let's take a look at Republic Financial Holdings Limited, or RFHL. So the bank would have reported a diluted earnings per share of $6.57 in the current period versus $6.20 in the prior comparable period, growing 6% year-on-year. Net interest income improved 8.5% to $2.9 billion, and operating profit improved 9.1% from $1.7 billion to $1.9 billion in the current period. Overall, net profit attributable to equity holders advanced 5.3% from $1.0 billion to $1.1 billion in the current period. So taking a look at Republic operating income trends. So overall operating income advanced 8% to $4 billion in the current period. Net interest income, which accounts for 72% of total operating income, grew 8.5% from $2.66 billion in half year 2025 to $2.89 billion in half year of 2026. Other income also increased 7% year-on-year from $1.06 billion to $1.1 billion in the current period. So looking at RFHL's diversified operations from geographical segments, PBT would have improved, or profit before tax improved across 4 of its 8 operating segments. Trinidad and Tobago, which accounts for roughly 55% of PBT before eliminations, would have declined 2% year-on-year, moving from $1.4 billion to a current $1.39 billion. Barbados PBT also decreased 17% from $224 million to $186 million. Suriname operations by PBT declined from $87 million to $84 million. The Eastern Caribbean advanced significantly from $68 million to $187 million. Guyana operations grew 22% year-on-year from $224 million to $273 million. Ghana also improved significantly to $123 million from $86 million. Cayman Islands remain unchanged at $230 million, and British Virgin Islands stood at $41 million in the current period. So from an income and valuation perspective, the company appears attractive on a trailing 12 months basis, with its trailing PE ratio declining from 17 times in half year 2022 to 7.7 times as of half year 2026. Its trailing dividend yields improved from 2.9% in half year 2022 to a current 5.6% in half year of 2026, reflecting stronger income returns to shareholders. So at a price of $106.98, Republic trades at a trailing PE ratio of 7.7 times below the banking sector average of 9.4 times, and offers investors a trailing dividend yield of 5.6% above the sector average of 5.3%. So more recently, despite delivering resilient results, Republic announced fee increases on effective May 1st, on select products and services following the implementation of the asset levy on Trinidad and Tobago-based assets. And this increase was likely aimed at helping offset rising operating costs across the group. So on the basis of higher revenue and geographically diversified operations and attractive dividend yields, Bourse maintains an overweight rating on Republic with a stable outlook for the time being. So moving on quickly to Guardian or GHL. So GHL reported a total earnings per share of 43 cents in quarter one of 2026 versus $3.32 in quarter one of 2025, declining 87% year on year. So this decline is largely due to the prior period, which is quarter one 2025, benefited from a one-off gain on the sale of an asset. So excluding this one-off gain, EPS from continuing operations declined 17.3% year on year from 52 cents in quarter one of 2025 to the current 43 cents in quarter one of 2026. Insurance service results expanded significantly 43.3%, moving from 181.1 million to 265.1 million in the current period. Net income from all activities declined 4.5% year on year from 412.4 million to 394 million in the current period. This decline was actually driven by weaker net income from investing activities as a result of unrealized fair value losses actually arising from volatile financial markets. Profit before tax declined 12% from 164 million to 144 million in the current period. Overall profit attributable to equity holders declined 16% from 119.6 million to 100.5 million in the current period. Looking at GHL's operating profit by segment, so its operating profit, excluding adjustments, declined from 233 million to 208 million in the current period. So its life, health, and pension segment declined from 160 million to 127 million in the current period, down 21% year on year, reflecting lower investment income from investment-linked insurance products. Its property and casualty segment improved from 60 million to 65 million in the current period. Its insurance brokerage segment stood at 12 million, and its asset management segment grew from 2 million to 4 million in the current period. So from a value perspective, GHL's book value per share improved from $14.20 in quarter one of 2023 to a current $27.72 as of quarter one of 2026. Its price-to-book ratio has become more attractive, moving from a peak of 1.8 times to a current 0.55 times in quarter one of 2026, indicating that investors are paying a lower price per unit of net assets for GHL over the period. So at a price of $15.25, GHL trades at an attractive trailing PE ratio of 4.1 times, significantly below the non-banking finance sector average of 36.7 times, and offers investors a trailing dividend yield of 6.5% above the sector average of 4.7%. So recently on April 30th, the group announced the proposed acquisition of 100% of issued common shares of NCB Merchant Bank, Trinidad and Tobago, subject to regulatory approvals. Overall, the group is supported by higher insurance revenue, as well as appealing dividend yields and attractive valuations and acquisition activity. However, although performance was tempered by volatile financial markets, which impacted investing activities. However, there have been recent signs of recovery in financial markets, which could potentially support investment income in upcoming periods. So accordingly, Bourse maintains a market rate rating on GHL with a positive outlook for the time being. And that brings us to the end of this week's edition of the Bourse Report. For more information, please give us a call at 226-8773 or email us at info@boursefinancial.com. Thank you for joining us, and we'll see you next time on the Bourse Report.